And there it is. AIB APEX Africa has been launched. Now, of course, this brings together two entities, and that is AIB Capital Limited and Axis, which had taken over Apex Capital back in 2015. And Axis is actually a Mauritian-owned company, and of course we're going to see how this new entity is going to be bringing a difference to the Kenyan market. Welcome to the Trading Bell. I'm Maalika Kazia, and today we're talking to Paul Mwai, the Chief Executive Officer of AIB Axis, and we're going to get into the discussion on exactly how these two companies merging is going to create a much more powerful entity and what we can expect from it. Now first, do take a look at his profile. Paul has over 20 years of experience in the financial services industry, including fund management and investment banking. He has worked in various departments within the then Barclays Group, now ABSA, and Barclays Dealing Center before joining the Barclay Trust Investment Services Group in 1998 as a fund manager. He moved to Old Mutual Asset Managers following the acquisition of Barclay Trust by Old Mutual in October 2002 as a senior portfolio manager and asset allocation strategist. Paul joined AIB Capital in February 2012 from African Alliance Investment Bank, where he was the chief executive of the asset management company. He is the current chairman of the Kenyan Association of Stockbrokers and Investment Banks. Thank you so much for making time for us today, Paul.
My privilege. Thank you.
Now, let's begin with this exciting new development. Of course, you've become AIB Axis, and I believe it's been, some time in the works. Of course, we saw Axis Group enter the market in 2015 when they took over Apex Africa, and now we're seeing this new marriage of sorts coming to fruition. So tell me a little bit about this process and where you're heading as this merged company.
Yeah, thank you. I think this started just about a year ago, where an idea came up that when we looked at the way the market was developing and the future of the stock market, we saw that the future belongs to companies with bigger balance sheets and bigger capacity to do innovative things. And we thought of a way that we could enhance our capacity. And we looked for a suitable partner, and Apex was one that fitted the bill. Apex was quite well renowned in terms of their strength in high net worth individual clients, in terms of their corporate governance, in terms of their professional services, and also because they form part of the Axis Group. We approached them and we started the discussion. Initially, it was just let's see where this goes. But I think when we put the numbers together and put the proposal together, I think it made sense to everybody, including our shareholders and directors, and it made a lot of sense. And therefore, we got little resistance on that, and we are glad that they gave us our support to push through this merger. So it's been a long journey, and we've had ups and downs and blockages along the way, but we're happy that everyone has been committed. We've had a lot of cooperation from the regulators. We've had a lot of support from our advisors, and we're really proud of what we've done, and our staff have been exceptional through this process. So we're happy that we've gotten here so far. We're looking forward to what's going to happen in the future. And as I said, part of the reason why we came back is that we needed to the leverage of capital consolidation. And when we look at where the market is going next, we now have the derivatives market, which is recently launched.
Yes.
AIB has been a major player in that market. We are looking at the possibility of developing market-making capacity in that market, with which you need the balance sheets to do that. We are also developing new products in the market, such as securities lending and borrowing. Now, securities borrowing and lending will create almost a new, very exciting opportunity in this market. The way the market is today, you can only make money when you buy and the share goes up and you sell.
True.
What securities lending will do is that it will enable you to borrow those securities, which you don't own, If, for example, you anticipate that the market is going to go down, you borrow the securities, you sell them and buy them back later. So you can make money both from anticipating a rise, but also anticipating a fall, which makes it more exciting in terms of the market. It'll create more trading opportunities, more turnover, and greater developments.
You have almost like a buffer then.
Well, I'm not sure it's a buffer. It's just it creates more room for trading. Yes, in the securities. So what you could say that without securities, without the ability to short sell, you're only playing 50% of the potential of the market. With the short selling, you now tap into the next of the 50%. So in effect, this has the potential to double the turnover of the Nairobi Securities Exchange. And there are a lot of people there who would be. But also it'll enable people to hedge their positions. The securities market will also interact quite well with the derivatives market. Because if you have a position in the derivatives market, through short selling and going long or short, you can also hedge that or create arbitrage positions with the spot market. So very exciting things coming into the market going forward, and we needed to be well positioned to take advantage of these developments that are coming up.
So even as we, talk about the market evolving, so to speak, right now, what kind of impact has the pandemic had, you think, on the local market and its trajectory for the future as well?
Okay, so the pandemics had, when initially we saw the pandemic start from China, then go to Europe and to the US, we immediately saw a knee-jerk reaction where there was sellout in markets around the world, and Kenya was no exception.
Yes.
And we saw significant price drops in the Kenyan market. We saw Safaricom drop from about 30 shillings to 24 shillings, EABL, BAT, everything. You look around, regardless of whether the sector was, we saw a systemic drop in the market. But after that, we kind of seen many investors looking at that as an opportunity. And we've actually seen quite a number of investors coming into the market for the first time, buying into the low markets. Some dividend yields have really gone up. You're looking at dividend yields of 6, 7, 8% in some of the shares. And people are saying, let me take advantage of this decline in the market to buy. So in terms of turnover so far, it's quite encouraging that the turnovers haven't actually dropped and people are trading. But more importantly is that we've seen an increase in local participation. The foreigners tend to move in and out depending on what's happening in the global market.
True.
And we've seen the local investors perhaps come in and fill in that gap when the foreign investors have been selling off in the market.
Okay, so for, let's say, a young investor who wants to, tap into this time and make sure that they're getting a piece of the low numbers, as you said earlier, what would be your best piece of advice for a new investor like that locally coming in right now?
Okay, and I think this is an opportune time to get into the market. And every crisis presents an opportunity. When you're in a crisis, you always think this will never end. But the truth is, we've been here before. In my time in the market, I can remember around the turn of the century, the stock market was at its lowest. I think the NSE 20 was below 1,000. Come 2002, the market shot up. In 2009, again, we saw the decline in the market. But those opportunities created, those who bought then really have no regrets, and they are sitting on shares which are significantly at significantly low prices and have earned significant dividend over the years. So those are the ones who maximize the return. And I think even this crisis, as much as there is so much uncertainty in front of us, I believe it will end. And for those who buy now, I think there'll be very good opportunities for long-term growth in their investments.
Okay. When we go back to talking a little bit about this merger, we know Axis Group is a Mauritian-owned company. So what kind of different systems and different way of looking at things have they perhaps brought to the table that have enriched the merger even further?
Okay, no, Axis is quite a large group. It has offices it's headquartered in Mauritius. It has offices in Geneva, in Hong Kong, and I think Dubai. And they have specialized in the high net worth wealth management space. They are leasing, and there are very many other areas. I think we have benefited from their knowledge in wealth management, and we are hoping to continue to tap onto their capacity. They're also doing brokerage, and we are able to partner with them on certain trades on the brokerage side. They also have a corporate finance advisory, and so corporate finance advisory is very good because there is deal reciprocation. So you would have a deal and you would show them, and they would have a deal and they would show us, and together we would be able to find solutions that would be beneficial to all of us.
Okay. Interesting. Let's talk a little bit about technology, because as we know, during this time a lot of work from home has been happening, and people have had to revise systems that they've had in place for years to accommodate that social distancing measures and trying to keep distance and not having a lot of people in the office. So what kind of technological developments have you seen at this time in the financial sector space that you think have shown a lot of promise, have brought a different vibrancy into how things happen?
Okay. Thank you. No, we have been very fortunate as AIB Axis that perhaps we were ahead of the curve in terms of the development in the market. In terms of the stock market, we developed the AIB DigiTrader, which was an automated trading platform where you could open your account remotely. Now, before the crisis, we were looking at clients opening somewhere in the region of 100 accounts per month. That immediately shot up to 500 accounts per month. So the social distancing meant that the embracement of technology, where people were perhaps a little resistant to embrace technology, they became perhaps more open to the technology, and hopefully will effectively over the long term move the world one step ahead in terms of embracing technology. The other interesting thing about our DigiTrader solution is we've seen clients from every part of Kenya registering. Very few actually come from Mombasa and Nakuru, which are the main areas where people have invested in stocks. We have clients in Moyale, and we get the list with you have to fill in your PO box. They have PO boxes of towns in Nairobi, in Kenya, that I've never heard of. And I'm looking at this and I'm impressed, and I'm like, all these people have been waiting for an opportunity to invest in the stock market, but have not had it but we are so fortunate that technology has opened up and democratized the opportunity for people to invest. And I think we will continue to see more of that. They say there's a silver lining in every cloud. Yeah. And perhaps the embracement of technology will be one of the big things that will come out of this crisis.
And of course, the larger digital penetration even growing further.
Absolutely.
If we talk a little bit about the different sectors, some would say that we've seen losers and winners emerge in this time. Not to say that they're real winners per se, but some sectors have had, increased demand, for instance, and things have been a bit more thriving for them. So, in your opinion, what sectors would fall into these two categories at this time?
So, I think the biggest beneficiary would be the telecommunications sector. The use of internet has definitely grown significantly. The use of telephone, the use of mobile money, electronic payment solutions have been a major. For a long time, we've kind of been resisting doing online banking. Now we have no choice. Everybody is registering for their online banking solutions. So that sector it will be one of the beneficiaries. The other beneficiary will be healthcare. I think there is going to be a renewed focus on healthcare. Although over the short term it will be a double-edged sword, because I understand people are not going to hospitals at the moment.
Stigma.
Because of the stigma.
Yes.
But over the long term, I think the commitment to healthcare will be a significant change that will come out of this. I'm not sure who the losers will be. I think that's one we are going to see. We are going to wait and see. Obviously, there are a lot of companies that are going to struggle in the SME sector over the short term. That will have an impact on the non-performing loans in banks. Fortunately, the central bank is encouraging banks to restructure those loans so that they give them space to recover. The hospitality and tourism sector is definitely going to take a significant hit. And unfortunately, because of the nature of the industry, that might be a little prolonged, because people make their bookings way in advance.
Exactly. Yeah.
So, you're not even sure when you can begin to start booking again.
Very true.
So that is going to take a hit. But we hope that, I think people will all be saving and waiting to go for that holiday once they are
able to.
They're able to. So
Yeah.
we hope that when it recovers, it'll recover strongly.
From a bit of a bird's eye perspective, what is your take on perhaps the global markets and the shifts that we're seeing, especially when it comes to the Dow, and the New York Stock Exchange really sets a bit of a tone for many of the others. So what is your take on that?
Yeah, yes, the global markets have been in ups and downs, quite fluid and being affected by various factors. But the global markets, particularly driven by the US, have been on a bull run for a long time. And some would argue that perhaps a correction was imminent. And so we've seen some level of a correction, which perhaps brought the market to perhaps, in my opinion, what would be a well-priced level. I think it all depends on how the economies develop going forward. I believe there is going to be some shift in terms of the economic power in the world going forward, and I think the US might not be the economic power that it was in the past, and therefore that might have some implications in terms of the American market's dominance. And we might see a bigger shift, hopefully, to Asia and Africa in terms of where growth is going to be spurred for going forward.
Okay, and the potential, of course, on the continent and tapping into that more, I think will be exciting to see. Yes. But even as we come to the tail end, what can we further expect? What can investors expect from AIB, Axis, and perhaps just a bit of a glimpse into the future and a few of your future goals? Okay,
thank you. I think we are all excited about this merger. We believe it has good benefits for both us and our clients, and we are looking forward to a lot of innovations. You can expect a lot more development along the innovation space. You can expect more products that are being plugged in onto the DigiTrader platform, so that it can become your one-stop shop to provide you all the investment solutions that you would want to get on the DigiTrader. We can expect greater innovations in terms of using the derivatives, using the securities lending and borrowing to provide alternative investments out of the vanilla investments which we have all been used to in the past. And indeed, we have already designated a manager who will be managing what we will refer to as alternative assets, which is now the derivatives, the securities lending and borrowing, the short selling. And we aim to be at the forefront of providing those solutions to the market. I think we will continue to play a major role in our corporate finance arm, and we will continue to leverage, hopefully leverage our balance sheet to do more things in terms of market making on the derivatives market. Hopefully also exposing our clients to these alternative assets and giving them an opportunity to invest
Okay.
Yeah.
And finally, as we close up, just your thoughts on investor education, even as all these new exciting happenings are taking place. Perhaps what more can we do to ensure that the local investor out there is understanding what the opportunities are?
Okay, so I think when we launched DigiTrade, one of the challenges we found is that a lot of people says I've never heard of the stock market. I don't know very much about the stock market.
Yes.
So we immediately realized that one of the bigger challenges to our selling this product was the education. And we switched our marketing pitch to more of an educational pitch rather than trying to sell the product. So we are trying to educate the public on investing in the stock market. That way, once they are educated, then they are able to come onto a platform. But I think that's a big challenge. I'm not sure where the solution is, but I think as the government switches to, I think, the competence-based curriculum, I think one of the things they should consider is to incorporate investor education as part of our curriculum. I always say that investment is a life skill. Everybody gets money. And what makes a difference is how you invest. What makes a difference to people over the long term is how they save and invest their money. Those who save and invest then are able to create wealth and help the economy grow much better. So I think that's a very critical part of growing an economy. And if you take examples of China, where the savings rate are as high as 40%, you compare to Kenya, where our savings rate are 30%, I think there is a need for our government to focus on educating the public on the importance of savings and investment, but also creating those legislation that would facilitate people to invest. In the recent past, we've seen the government pulling back on some of the incentives that they have given. We saw an attempt to tax pensioners, for example. That is perhaps telling people not to save. I mean, it's sending the
wrong
signals. So we would like to urge the government that saving is a very critical part of growing an economy, and investor education must start right from our primary schools to our high schools to our university. I think most people learn about investment when they are in university.
Yes.
Most people start investing after they get married, I think. So, we've got to encourage our younger generation to start earlier.
Yeah, getting in earlier and being able to get them into that understanding and that system, I think it's a very interesting thought that you've had, and definitely important as well. So thank you so much, Paul. We really appreciate you taking your time to join us today.
Thank you.
And there you go, a lot of insight from Paul, not only on AIB Access, but also, of course, for investors, especially if you're somebody who's thinking about investing into the stock exchange right now and what to expect if you're new, how to go about it. He definitely had a lot of interesting information for you. But that's what we aim to do on the Trading Bell, bring you that kind of information and so much more. Catch us, of course, on the next episode, but you can keep up with the Trading Bell through our social media handles that are appearing right there on your screen. Well, until next time, I'm Maalika, Kazia. Stay safe and stay smiling.